Good morning, everyone, and welcome to the Pivot Boss pre-market video for Tuesday, October 5th, 2021. I am Frank Ochoa, aka Pivot Boss. Thank you very much for joining me last afternoon for our Pivot Boss monthly market outlook for Q4. We got a lot of candidates under our belt, talked a lot of higher time frame ideas, especially with regards to the NQ, crude oil, nat gas. If you want to re-watch that recording or want to watch it for the first time, you can click the link in the description below to re-watch that recording. Let me know what you think. All right, let's go ahead and take a look here at the ES in the daily time frame. You'll see right here that we have our key range low that is in play right now, and 3 days running prices traded below that key range low, but right now managing to trade back above it. That's an important key range low. You have the key range high, key range low, midpoint here, and so if there is a rejection of these 42.93s, then you would tend to see a bounce at least back toward 44.21s. That would be the midpoint of the range. The one thing that we've talked about here recently is, does the ES need to go down here and get this previous quarter's low before it can move higher? In our monthly market outlook last night, we mentioned the best buy scenario would be somewhere in here for at least a first test at a bounce, and a failure for that to work out would suggest somewhere in the 4,000 to 40.50 zone could be the next area for a nice entry zone, at least from an end of quarter perspective. So right now, again, the fact that we're so close to that low, do we still see a little bit more weakness into that low? Are we patient? Which means currently we are in a downtrend. Currently we have just hit new lows after a lower high. Does the next bounce here, is that going to likely be met with selling pressure for another round of weakness? Do we see that come into play here today? After morning strength, do we get morning weakness? That midpoint from yesterday's session is going to be very, very important here. That is 43.1475. Can price push through that area and hold, or do we rotate back off that zone? As you see right now, the current high of the day is 14.75, which is exactly yesterday's midpoint. Again, through that level would open up a bit more upside, but a trap or a rejection of that level could lead to selling pressure the rest of the day. A breakthrough 2-day lows could open up a stop run day down scenario as this thing attacks the previous quarter's low. All right, let's take a look here at the NQ. In the previous session, the NQ did get the previous quarter's low. We've also traded below it here in overnight trading. You can see right there that is the previous quarter's low. First time we're hitting the previous quarter's low since the COVID sell-off last spring of 2020. And you can see right here again, the initial tests below that level have been defended. We've bounced a little bit, but very clear again, we are in a current downtrend, another lower high. You can see a series of sell signals that have led to lower lows, and right now, again, no signs of clear rejection just yet. The zone to watch would not just be just below this previous key range or quarterly low, perhaps a bit lower into the LVN below, maybe that 14K round number, which is also composite VWAP, and the 200 period moving average. So again, do we get down into this zone? One of the ideas we talked about to end the quarter would be buying 14K for a move back towards 16K by the end of the year. Obviously, again, we would need significant rejection in this zone and a recovery of prices back above the quarterly low in that scenario. So do we see a little bit more downside? Again, right now, downtrending price action. Any bounce could be met with selling pressure until we see a significant rejection of some nature. All right, let's take a look here at crude oil. Now, crude oil is trading at new highs. This is new highs that we haven't seen in 7+ years. Through 78s, 78, 79. The weekly time frame shows that this is the first time we've traded in this zone since probably 2013, somewhere in that zone, 2014. And again, if we are able to finish the week through 80, that would be significant. Right now, we're only $1.20 from that zone. This market's averaging $2 a day on a 10-day basis, $2.45 on a 5-day basis, and we're only on a Tuesday. So to close through 80 could be significant. If that were to occur, it would be a weekly bar that would be seen as a transition day or a transition week through that market structure that could then open up the next major market structure above. As we saw last night in the monthly outlook, the next market structure takes us from 80 to 110. So this is a big time zone. Again, do we see rejection at this area, or by the end of the week do we see a major transition week through this zone? That could be tremendous moving forward. So right now, very bullish, buy the dips until proven otherwise. Let's take a look now at gold futures. Gold has recently bounced. 720 came into play here. 720, a big time support area. You can see the tremendous stop run day that we had here, and ever since that day we've held above 1740 on the pullback. Again, I mentioned pre-market Monday morning that if we pull back here, any pullback as deep as 40 could be held for a continuation higher toward 80, and through 1780 opens up the next zone above, which would be 1840. So again, can we get back toward 1800 and 1840? It all starts with holding this pullback, forming a higher low, and getting this thing going to the upside. So again, any pullback toward 1740 could be an opportunity to buy. We may not get that deep anymore, but again, this market right here within a 3-day range can sometimes build out within that range and then see a failed low and go. Again, any pullback could be seen as a push back toward value at 1800 with a continuation toward 1840 ahead. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trader room. Take care.